Felix here. Welcome to this pre-market live stream. While mainstream media is trying to tell you the rally is over, you gotta sell, you better panic, it can't go any higher, which I'm going to explain to you is nonsense. And we're going to make a lot more money in the coming weeks, and I'll tell you exactly why, and I'll tell you exactly with what stocks and what sectors and everything else, so you are the best informed, shiny, happy investor out there. That's always my intention. So I'm going to share my screen with you. There we are. This is one of the charts mainstream media is talking about Schiller, which is sort of a PE type thing, as in, you know, are stocks overvalued? And they're saying, look how expensive stocks are. They've only ever been more expensive in 2000. And you know what happened then, right? That was sort of what they're saying. Now, no one ever made any money panic selling. And I'll tell you and explain to you why I think this rally is going to go a lot higher. Now, I don't have a crystal ball. Winston keeps eating them, but I'll give you some facts, okay? So they're also saying the small cap rally is overextended. It'll be over soon. But if you actually look at the data, we're here, right? This was 2021. We were like at triple the level. 2008, we were at 2.5 times where we are right now. So we could go a lot higher. And yeah, it could become a bubble, quite possible. But you ride the bubbles up. You don't go, I'm against making a lot of money. I don't really agree with that sort of thing. So I'm going to sit this one out. I mean, I know some people are, but it's pretty moronic if you ask me. And if you want to learn how to spot those breakouts, and there'll be lots more in the weeks and months to come, well, do you know what to do? Yes, you do. You watch my free masterclass, because I'll actually teach you in that how to spot the breakouts. I'll give you the four, bankers can't count. The 4 rules you got to apply, and exactly how to do it. We'll run through some real traits in there and so on. And you'll learn literally those 4 patterns. Why do I do that? I think you deserve to know. I think it's as simple as that. I think everybody deserves to know. And I didn't believe it was possible. And then I was very lucky. I got shown this by a chap I used to work for, and changed my life. Very simple. So go change your life after this life. Obviously afterwards. You wouldn't want to miss a minute of this now, would you? Now, this is another chart that I saw today in mainstream media saying the socks, which is footwear. No, it's you know, semiconductors, right? Chips, semis. And they're saying, well, look at this horrible stock pattern. We're down to this line here, this one. I'm drawing in there in green. That is the 200-day moving average line. And it's true. The mantra goes, nothing good happens below the 200-day moving average line. But look at the stock. Does this look like doom and gloom? We bounced off it here. Whoops, what happened? Microsoft sabotaging me. Why does it do that? Does anybody know why it does that sometimes? Okay. It bounced off it here. It bounced off it there. So there is every reason to believe it's going to bounce off it here. And what we are actually building is an uptrend in what is otherwise kind of a sideways action. This is actually quite a positive chart, if you ask me. So, is this the house with a leaky wall? What? Carl, what are you talking about? Explain yourself, my friend. And let's just zoom out for a moment. That's why I always say to people, if people are freaking out or people getting too excited, just zoom the frick out, see what's actually going on here. These colorful charts, and for once, the chap who made these charts found some different colors, which is very unusual. Normally it's blue, blue, and blue. What's the Trump color? It's that sort of light violet color. I'm not sure I have that color in my inbox here. Oh, hang on. We've got a rainbow color. That seems appropriate for a Trump chart. So this is here where we are right now. Right. So this is how the Russell 2000 behaves after presidential elections. And we're behaving basically exactly like we were behaving. I'll get rid of the rainbow colors. In Trump 2016, which is the blue line there. In Biden's, when he won, right? Well, you know, let's not discuss that. That was the purple line there. And what happens? Well, on average, we should go up another, what, 8 to 16%. That should be, by historical standards, the rally going into year end. So I'm not selling my IWM shares. That's definitely happening. Not happening. Okay, we'll look at some stocks in a second. Let me run through some important data here first, and then I'll get to all your questions. So do ask them. The sweetest setup that you can hope for as an investor is a gradual reduction of interest rates. So, we were at, what were we at? We were at 4.25. If they cut massively to, 3% or something, it screams what? Panic, right? The economy is falling apart. No, don't do that. But instead, if they do it gradually, sort of step by step as they are right now, they sort of do this kind of thing. It signals to the market, everything's going to be all right. You could sing that in your best Bob Marley voice. And that is exactly what seems to be happening. And the stock market, from the first rate cut, this is the first rate cut in a slow rate cutting cycle, the sort of gradual chipping away at the rates, goes up historically about 32% up to here over the next 24 months. That's just rate cuts. This does not take into account deregulation, tax cuts, any of that sort of thing. So I think there are many reasons why we are in this la-la land of just wonderfulness in terms of the market. I haven't seen a setup like this, and I can't remember when, to be honest with you. And there is more, even fundamentally. US incomes, wages are actually going up. They have more money to spend. They're going to spend it. Americans and their plastic, they're probably going to spend more than they have. Bit of a dig at 60% of the audience. Sorry about that. I should stick to picking on the French. There are only about 2 on the stream ever. And then let's look at the stocks that have really, really rallied, right? Tesla's had a tremendous post-election run. It's down about a percentage point this morning. If you want some bad news, yeah, a percentage point. But it's still lagging the Magnificent Six. This in blue, can we get a blue pen? This in blue here are the Mag 6, so basically the Mag 7 without Tesla, and then in that sort of slightly shitty color is Tesla. Don't know why they picked that color. It's like an odd color to choose. Now you can pick 2 colors. Yeah, I'll go for the weird sort of brown thing there. That's Tesla. So Tesla is still lagging massively here by 57% compared to the other Mag 6 stocks. And what does that mean? Well, it means there's potential to go a lot higher. That's all I'm looking at, right? And again, this is just compared to the others. This is not about robo-taxis or robots or deregulation or anything like that. It's just comparison against its peers. So why then are we slowing down? Why is the rally not like rallying like it was last week when it was a lot more fun? It was a lot more fun, wasn't it? They're trying to jam my signal. Stream health over here seems healthy, it says. YouTube says healthy. There you go. You see? Stream health, healthy. But yeah, not much I can do about that. This is actually why we take a breather. And if you are a user of TradeVision, which is where this chart comes from, then you will understand a little bit more about that, and you can get yourself a week's trial to that if you care to. We have this red line there, right? This is called the resistance line. And as I explained yesterday, that's where the French come out and they hit you over the head with Burgundy bottles. It's pretty much exactly what happens, except it's not the French that come out. It's market makers that come out and they sell the stock. So we're trading just below the $6,000 resistance line here. And every attempt of breaking through it, the market makers sell. Why do they do it? Just evil people. No, actually it's risk management. It's the way they're set up. They have to sell. They haven't got a choice. They have to sell. It's the way their positions are set up. So as long as that's there, and as long as we're trading just below it, unless we get some massively good news, or the resistance line shifts up, which you could, of course, watch live in TradingView, then it's hard to break through 6,000. So that's what happens. Every rally looks like that. You go up, you get a little bit tired, you go up, you get a little bit tired, sometimes you go down, but there's always this kind of plateau point. And that's exactly where we are right now. There's nothing unusual, there's nothing weird about it. It's not the end of the world. It's just a little bit of patience. It goes a long way. So Go find some breakout stocks. There are plenty out there. Watch the free masterclass. Links down below. felixprehn.org/get-free. It's also in the description. And actually learn the patterns that I was just hinting at there. Now, there is more good news. And this is Bloomberg is becoming really miserable, right? They are really pissed off that Trump won. So it's really weird. The whole editorial stuff, everything is just, this article is about, I don't know, Palantir. Maybe we can bring in that we really hate Trump. We really hate Elon. It's really weird. If they don't stop it, I'm going to stop reading Bloomberg, which is weird. They're basically saying it's up 250% this year. Woohoo! And increasingly skeptical analysts. But what they also point out is that the bulls are pointing to management connections to Trump, which makes it sound very devious and evil, right? They're going to push for AI to boost sales. And yes, they will. And I believe the US government is going to be run entirely on Palantir. Not entirely, but significantly on Palantir. Because if you can automate all the nonsense that the 23 million people in government are working on, you could actually probably sack half of them, which seems to be what the plan is. So who owns the mainstream media? Yeah, good question. The Economist. Oh, don't get me started on the Economist. But that's always been a left wing, sort of thing that you buy in case you run out of toilet paper. At least the last 20 years, it's been that. It used to be kind of a proper economic journal, and then they went really to the left. I don't know what happened there. But look at what's actually going on out there. ASML, right? They make all the advanced chip making machines. Like, there wouldn't be a single NVIDIA chip without ASML. And what are they saying? They've reaffirmed their long-term revenue outlook. Look, they're seeing an AI boom in the semiconductors sector. So that's pretty good, right? What about this one here? Cisco, right? Biggest maker of computer networking equipment in the world. Better than expected quarterly results. An upbeat outlook. Yeah. And they're being conservative about the annual forecast. Okay, they're being conservative. They're going to beat it, right? So the actual data out there is just insanely positive. So I don't really understand the doom and gloom just because Tesla is down, 91 percentage point. And if you think about it, we came from 220 in October. We're at 340. Stock goes up like that. It's completely natural. It's going to drop a few points. And again, look at where the resistance sits. It sits at 340. It's been there all week. And what have we done? Well, let me show you. Let me show you on a 5-minute chart, okay? And you can really see it. Programmer, thanks for your kind comments there. I was actually spying on you before we went live. I saw you saying nice things about TradeVision, which is rather nice. I might forward that to the dev team because they don't get a lot of love from us. We're just like, there's a bug, fix it. Okay, so what are you looking at here? You're looking at the last 2 days of Tesla on a 5-minute chart. And every single time that we've broken out above the 340 line, right? This whole kind of sector up here. What do you see when you go down below? Down below. You see massive volume of selling. So we come down, the volume comes down, right? And you break out here. What happens beginning of the day? Massive volume, which is massive selling, stock tanks, right? We break out here. What happens? Massive selling. Who's doing that selling? It's our lovely friends, the market makers. And I appreciate most people don't really understand how market makers work. Honestly, you don't really need to. You just need to understand that they're there. They're on the other side of trades. They have a fairly complex hedging system going on, which forces them to sell Tesla when it goes above 340. That doesn't mean we can never break up above 340. No, of course it doesn't. But the market needs to shift, or we need to get some good news. So we need to get something that gives us some oomph to break significantly through it, and therefore for all the trades to get shifted up. But for the moment, 340 is kind of your, the resistance line. And that's okay. That's just the way it works, right? I mean, the breakout moment, and again, I'd encourage you to watch the breakout masterclass. That here was the breakout here, right? That was at $200. So you could have bought at $200. You would have exited there. That would have been your profit taking at about 250. And then what would you have done? if you understood what to do? Well, you would have waited for the next breakout, which happened at 217. So you didn't have to write it down. You didn't have to be a bag holder for 3 or 4 months. And you would have gotten in again here at about 240 or something like that. And then you'd be very, very happy right now that you'd be up 33%, right, on that trade. So all you got to do is learn, like, what is the breakout? And there's a few things here to it. Watch the masterclass and you'll be much, 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 much wiser. Links down there below. There are two sides to every trade. There are, and there's usually a market maker on one side of it. So, this whole idea that trading and investing is lose-lose or win-lose, it's just not true. It can be very much win-win because you can make money, the market maker makes money, they always make money, and everyone lives happily ever after, right? So let's look at a couple of our top stocks here and see what's going on there and what's the bull case scenario here. I mean, just going back to Tesla for a second, if you just think about if regulators got out of the way of Tesla, think about the speed of innovation. Think about that for a moment. And it won't just be Tesla, it'll be everybody. So less government is usually very, very good for business. Simple, less cost, higher speed. SoFi currently hanging around the 1350 mark here. Resistance is at 15, so we could inch a little higher. And fintech, again, is plagued by regulation. And if we get sort of banking and fintech friendly regulation into the US government, which seems entirely possible right now, plus falling interest rates continuously, I think we're going to see SoFi in the 20s, but that's just my particular view on that one. Palantir, we just touched upon. Here she is. And yeah, the last breakout was here at sort of $48, $50, and now we're at 61, which is pretty good. And our support is at 59. We touched upon that on Wednesday. What's the day today? Is it Thursday? Is it Friday? What is it? On Tuesday, right? Yesterday, we stayed a little higher. And look how nicely we stay above my trend line there. It's almost as if trend lines made sense. So it looks good. Again, just a little bit of a pause there. We're waiting to see what Doge is going to do. They've officially created an X account, which must be a good step forward. And be very interesting to see how do they manage to get rid of all the waste. And I don't just mean, how do you get rid of millions of people out of government, and how do you replace that with systems that are automated, that run it better and more efficiently, and also make sure there isn't any waste? Well, I can think of one system. It's called Palantir. Could do that pretty easily, if you ask me. And yeah, so I think there's a lot of positivity there. Actually, back to the Tesla story, there's another thing, and I actually just recorded a video on that today, which I'll put out, but to give you a little bit of a preview on that. FSD, right? Full self-driving. At the moment, we're thinking about robo-taxis, right? Now that Elon is at the heart of government, who else do you think would benefit from self-driving vehicles? The military, right? Don't you think that every tank and every government vehicle and every military vehicle should be self-driven? Well, who's got the technology to put in that? Tesla, right? Elon's not opposed to military-type contracts, right? He's providing Starlink to the Ukraine, for example, and other places. So he's not a pacifist. That's what I'm trying to say. That could be a significant revenue stream. Connect the FSD technology with Palantir running the operation for the military, and suddenly you've got self-driving vehicles with a gun on top that are, incredibly powerful. So I think that could be a huge revenue stream for them. And exactly, military drones, right? Because I'm always baffled that there's still people in these planes. I mean, it seems madness. Like you don't want to send people in harm's way, right? You just want to send the tank, right? Why does there need to be somebody in it? It doesn't seem particularly logical. But obviously, being able to drive itself properly seems like a good idea, because otherwise you need a guy back home, like a joystick, who's moving it. That also seems insanely inefficient. So I think there's a lot of good stuff coming Tesla's way there. What else do you want to look at? We haven't looked at PayPal in a little while. Nvidia we should look at as well. We can definitely look at Mara for sure. Boo Boo Pikachu, genius Felix. You know, there's a lovely quote that says something like, "Don't mix up genius with the bull market." So I'm very happy that we make about the same amount of money in bear markets and in down years as we do in bull years. To me, that's actually really the important thing here. PayPal, yeah, just, you know, edging upways slightly. We got a higher low yesterday, got a slightly higher high. It's all good. It's all good. It looks absolutely sweet and wonderful. If you're asking me, let's look at NVDA for a moment. Carlos, I like the uranium thought. We did a uranium trade months back, right? That did quite nicely. And NVIDIA, do you see my resistance line at 150 here in TradeVision? It's almost as if it matters. The stock is just completely trapped between its support and resistance. It's a pretty narrow range. 144 support, market makers buy. You get to 150, they sell. And guess what? A lot of the market knows it. Wall Street knows it. You might not know it, but check out TradeVision for a week and then you'll also know it, right? And then you're never going to buy NVIDIA at 149.50, right? Only to see it hit 150 and go absolutely nowhere, right? We want to buy things when they're about to break out, when they're about to like really give us a momentous move, and you know, watch the masterclass on that. But it makes no sense to me for me to buy NVIDIA at 147 when it can go up 2% until we hit our head, right? Unless we get some amazing news in the earnings, which of course is why we're also trading sideways, probably. Have you been buying any Nike stock? No, absolutely not. I'm not a big fan of retail. Think about it. If you start a shoe company, right? Not only do you have to have lots of models and colors, you now have to have them in every shoe size imaginable. And if you didn't make them big or small enough, you're probably, you know, a racist or something. So I think from a business model point of view, I'm not really a fan. Now, I kind of thought Nike was going out, but then my godchildren came to town who are like 8 and 12, something like that. And guess what they wanted to do all day long? Go to Nike shops. We went to about 12 Nike shops to find a particular trainer. And I thought, Nike is still a thing. So I wouldn't write them off. I just, from a chart point of view right now, this looks pretty hideous. This is a falling knife. Hasn't really done much. So no, I would be, this is actually a pretty perfect head and shoulder pattern there, right? Which is one of the few stock patterns I'm actually a fan of. Okay, left shoulder, head, right shoulder, right? And then down. So let me write that on here. So that is left shoulder. That is the head. That is the right shoulder. And what do you do with that? You basically draw a straight line that connects the armpits. I know, weird, isn't it? So something like that. That would be your armpit. And the moment that you break below it here, you scream, sell, sell, run, right? And that's exactly what's going on here. So yeah, I'm not a fan of the chart pattern. That's, guess what I'm saying. Disney earnings, I think they identify as being very good. Okay, let's have a look at Disney. Well, when are they? Tomorrow? Somebody seems to know something, right? That's always the interesting thing with stock charts. Look at that volume and look at that buy volume there, right? And we're trading up. Did the earnings come out already this morning? Did they? Oh yeah, they did. They did. Okay. So they obviously were good. So they jumped. But people seem to have known yesterday. Somebody knew yesterday. If you watched that chart, and you know, you might have been inclined to buy Disney yesterday, because that's actually a pretty big move on pretty big volume there. The real breakout, where was it? I guess it was here. I'm not in on this, to be honest with you. Look at the chart. The problem is there are a lot of people in Disney who've lost a lot of money. So every time it goes higher, the buggers are going to sell, aren't they? Right. Okay. Let's look at a couple of crypto stocks here, my friends. MSTR, which I have a trade on MSTR at the moment, and it's looking rather good, really. I mean, okay, we're kind of in the middle of yesterday's trading range there, but yeah, what a rally, right? And in a way, I think they're lagging Bitcoin still, but look at the volume here. Like that's really extraordinary. So good call here from TradeVision. Nice buy signal. Although the real one was, I guess, here at 144. That would have been nice, wouldn't it? If you would have gotten in then. Did I? No, I didn't. I got in a little bit later than that because I wanted to wait till we'd exceeded here these previous highs. I'm a bit conservative there. How do you know when the report will be posted? You see these little earnings symbols down here? They tell you the date and also if there's a surprise and what the actual numbers are. So reported. If it's reported, it means it's actually out. Drew, you think SMCI is going to go bankrupt? Yeah, interesting. Not filing on time is definitely not a good thing to do. It's not. Yeah, they do work closely with NVIDIA. So it's kind of an interesting one that they've got shenanigans in their accounts going on there. And yeah, there is a case to be made that NVIDIA's earnings are somewhat fluffed. I made some videos on that in the past. G-Taxi, thank you very much for like number 294. We've got 1,800 of you live and less than 300 hit the like button. That's what it must feel like to be a very unpopular politician. You see, Washington is going nuts at the Trump appointments. I quite enjoy it when politicians go nuts. They're like screaming, you know, blood and murder because he's appointing all these people who are not part of the, you know, the swamp, so to speak. Nice little bounce from Amazon. Yes, you're quite right. And I did actually, I shared that with you guys in the stock community, that I thought that was a very nice looking chart a couple of days back. It was a very nice looking chart here, wasn't it? And then there was sort of a second coming here at around 200. And despite Bezos, the almighty, selling yet again, we actually put in a pretty nice green candle yesterday. But the resistance is at 215. So we hit that yesterday. Do you see that? 215. Again, if you look on a minute chart or a 5-minute chart, you can see exactly how that works out. So this was yesterday. And there we go. So the day kicked off here at 9 a.m. We started a little above it. And what do the market makers do? They come in and they go, sell the bloody thing below 215. And we did that. And then look at how we hit the 215 mark again and again and again. And when we went a little higher, like here, more volume, selling. Market makers selling, right? So the buggers are selling at 215 and they're slowing down the rally, which is an interesting point to understand. John says, Long says, it's amazing, it really works. It is, isn't it? It's sort of like amazing because it's based on real data, right? It's based on real options positions, essentially. And John, you use it all the time? Cool. I love that. Drew says, yes, TradeVision works. Brilliant. Jay, yeah, just subscribe to it. You get a week completely risk-free. If by day 7 it still makes no sense to you, do watch the tutorial videos we have. If it still makes no sense to you, obviously let me know, and you don't have to stick around. We're not going to actually bill you till week 2. So what feature do I use the most? I use a little bit of everything. I mean, in a sense, I'm very lucky. It's sort of built on whatever I want, right? Jeff and I, who's my partner in this, my partner in crime, who is an ex-Twitter guy, actually. He was a student of mine, and I said I wanted to build something, and then he said, well, why don't we just build it? Well, actually, I said it'd be nice to have something like this, and he said, just build it. So we've done that. So I use, obviously, the stock charts a lot. I think the resistance support makes life very, very easy. I like the trends. I like the emails I get twice a day because it gives me ideas on stuff that I wouldn't look at. You know, I have my own scanners and so on, but I don't always look at every single random stock that's moving. And therefore I find it quite useful to get these, we get these email alerts every day. So say for buys and, you know, might be stuff in here that maybe I wouldn't have looked at, you know. I don't know, Datadog or something. Maybe I wouldn't have looked at that. Or here, what is this? West Pharmaceuticals. Like I didn't know that stock existed, right? But then you look at that and it's actually looks like it's gapping up here pre-market. So it just gives me ideas that I wouldn't otherwise have had. And I think that's very, very useful. And we're also putting out a lot of cool stuff. We're going to have a trade tracker coming out shortly. That's in beta at the moment. Mobile versions coming out hopefully before the end of the year. No firm deadline on that, but yeah, a lot of cool stuff coming out over there. Where can I find your basic training video? You mean for TradeVision? There is a tutorials thing here on the right. You see that? And that gives you basically tutorials. It actually explains to you how it works and how to use it. And then, you know, there are videos here for all the bits basically. So you can kind of just click through it, and I would literally just watch it. They're very short. They're a couple of minutes each, but then you'll actually know how that works. And we keep adding to that every time we add a feature. If any of you have noticed that there was PPI data out today, I think it was a bit of a non-event. It's slightly higher than expected, but not massively. So I don't think it really matters. Papa Powell, the Almighty, speaks at 3 p.m. today, I believe. Yes, he's speaking in Texas, and sort of an overview over the economy type thing. Be interesting. I don't think it's massively market moving unless he's going to say something really idiotic, which he probably won't. So I think not a huge event. Does TradeVision have a built-in alert for breakout stocks? Yes, it does. It does. Emil is bribing me there to answer his question. It works. So let me answer it. VOL, actually, VLO rather. Valero Energy, which we covered the other day, right? In a video. Is that a breakout? Well, have you watched the masterclass, my friend? What would I ask you? Are all the elements there that you want to be there? Well, you're above the 50-day moving average line. You're lacking volume because it's just flat. And your 50-day moving average line is flat. It isn't going up. So no, I'd say it isn't a breakout yet. I think we need a little bit more till that happens. The market's open. Oh dear, shall we look at it? Let's have a look at QQQ. I had a quick look at 835. Where is QQQ? Does that work? Yeah. And there wasn't a lot going on there, to be honest, which is kind of a good thing. So if you look at a minute chart, I like to do that when economic data comes out, and I obviously have an inkling what it means. Are we allowed a minute chart? Yes. And where was it? It was here at 8:30, and it looks dramatic, right? But we went from $512 to $511, bounced up immediately back to $512. So in reality, we lost about 50 cents, which is not really a great deal. So the market doesn't care about the inflation data. And it's a good way of checking if your hunch on some economic data is right. Literally just look at the chart and you'll know within a few minutes. So I did that this morning. What happened to Coca-Cola? They made everybody fat. But it's a good stock. At least in the long term, it's a good stock. Let's have a look at the chart. There it is. But yeah, it's a falling knife right now. And you know, if you watch the masterclass, and you will never look at a stock chart the same way again, and you will see that there is a pattern. There is a rally, there is exhaustion, there is a rally, there is exhaustion, and then there is running down the hill going, you know, and that's where we are right now. If you ever run down a hill really, really fast, you can't actually stop, right? I did that the other day. I ran to tennis, and I was running a little late, literally, and I thought, well, I could drive, which would take 15 minutes, or I could run there, which I thought would take less time. But the hill is about like that, sort of like that. So it took me 8 minutes to run down, but I was running so fast I wasn't sure I could stop. And it's quite fun, actually. It's quite liberating, but it's not great when it's your portfolio. So would you buy at this level? No, of course you bloody wouldn't. Everything is selling, is saying it's selling, and everyone's going to sell some more, and the more it sells, the more people freak out and the more people sell, right? So wouldn't do it. Richard, we're ignoring your messages about canceling your membership. Richard, we would never do such a thing. Could be in a spam folder or something, but you know what you can do? You can just cancel it yourself. It's actually very, very easy. If you go into TradeVision, there is there's a bit of a tutorial. There's an account button here. You see that? Account. And there isn't a cancel button. Here, delete account. You see that? So you click on your name and you click on delete account. And yeah, we could make that a little bit more obvious. I think that might be a good idea. I will take a screenshot of that. We don't want to keep you hostage, my friend. Not our intention at all. So yeah, just click on that, and that way you will, be done with the bloody thing. Right. Joshua's posting some hearts. Appreciate that. Thank you very much. Have you been into any of the opens yet? Jimmy, what are opens? Tennis? Opens? Oh, yes. Yeah, I used to. Actually, I grew up in Hamburg where they have a German open. I used to go to that, which was quite fun. Monkey Wrench, you have liked the video and commented. My friend, you are my friend now. Brilliant. Love you for that. Let me do a quick recap of where we actually started this for everybody who's literally just tuned in, so we make sense of the thing. What I was basically starting off with is that mainstream media is trying to freak you out, and I wouldn't let them freak you out. Obviously have risk management in place. That's always important. But they're saying that stocks are insanely overvalued. This is a sort of Schiller metric, which I think is an idiotic measurement. It was only ever higher during the dot-com bubble. Boo-hoo. Now, let me explain to you then why I'm continuing to be bullish and why I think mainstream media is a bunch of nincompoops. They're also saying small caps are overextended. Well, they're here, right? In 2020, we were up there. You know what the difference is? The difference is 80% or 3 times higher. So yeah, we could go a lot higher. We could go a heck of a lot higher. This is small caps here. I encourage you to watch the free masterclass to learn how to spot those big, beautiful, bouncy breakouts so you can make more money. FelixPrehn.org/get free. Link is also down below. Semiconductors are dawdling along, but it's just NVIDIA earnings are coming up. We are actually forming higher lows. So I think, again, everything looks pretty good over there. The Russell, which is small caps, after presidential elections, let me get rid of all this, tends to go up a lot more. So we're here, right? All the other ones are the previous Biden and Trump and so on. Under Biden, we would go up another 16%, right? Now, Trump is no Biden, and he's going to be a heck of a lot more small business friendly than let's regulate everything Biden. So I think there's a pretty decent chance it's going to go a lot higher. Now, of course, we like to hear more about details of policies and so on, but I think there's every reason. And what's going on right now with the Fed, gradually but slowly but surely cutting interest rates in this sort of, step pattern, that is the sweet spot. That is exactly what we want. Slow rate cut cycles is this line here. In a slow rate cut cycle from the first cut here to 24 months later, you go up 35% in the S&P. It's the best scenario. Why is it the best scenario? Slow rate cuts are basically saying to the world, the economy is fine. It is sunny every day. Don't worry about a thing, son. We're going to do everything just right. So it's kind of the perfect scenario. TradeVision app, yeah, it's in progress. We're working on both Android and iOS versions. Hopefully coming out pretty soon. Our dev team is very good. They are very, very good guys. So, but I can't promise you an exact date. We have a deadline for it, obviously, internally. It's I think it's our number one priority right now, actually. Yeah, it's the number one thing we're putting the most manpower onto is the mobile apps, because I appreciate most of us just consume stuff on mobile. So, you know what else is good? Incomes are up. American incomes are actually going up in real terms too, which is a good thing. So it means more spending, right? Should be good for the economy, good for everything else. Tesla, everyone's saying, oh, can't go any higher. Well, it's still 57% lower than the other Mag 6 stocks. And I would argue that Tesla is a little bit of a more juicy, exciting proposition, especially now that the regulatory hurdles are literally out of the window. Logan said, we guaranteed a January release date. I'm always hoping that's going to happen sooner than that, Logan, but no. We're not going to promise a date, because if I do, a lot of people will send me emails and they'll be very angry, and I wouldn't want that. But no, I'm hoping we're going to get something together by the end of the year, but you can't always predict technology, and yeah, there are some challenges with getting all the options data on a small screen. So the guys have got their work cut out for them there. And then walked you through like why there's a 6,000 point resistance on the S&P. It's basically market makers. There's a resistance line there. You can look that up in TradeVision if you want. I want to encourage you to literally watch that masterclass, because lots of you are writing nice comments about it, which is great. Why is TradeVision only available with a credit card, Jules? You must be a European who is averse to credit cards. It's just easier. Stripe is what we use for billing. They accept credit cards. Yeah. 70% of our users are probably in the US. They use credit cards. So yeah, I know some of you Europeans would rather use your debit card or something, but I'm sure you've got a credit card, don't you? I'm sure you have a Visa card lying around somewhere. If not, it might be the exciting thing to get that thing done. They are not evil. They don't bite you. They're not incredibly risky. A lot of Europeans still think that, just to explain it from my European friends, especially the Germans and the French, seem a little bit loath for credit cards. I don't know why. ASML reported very good numbers, reaffirmed their outlook. Cisco, better than expected results, good outlook. So everything is hunky-dory and absolutely wonderful. So enjoy the day, my friends, and go watch the masterclass. Felix Prehn at Oxford, get free. Links down below. I love you for watching. I love you for tuning in. I hope to see you live.